Hometapcom reviews pricing explained what you get for your money. If you're a homeowner looking to access your home equity without a traditional loan, Hometapcom might be an option. But most people get this wrong by assuming it works like a standard mortgage or requires monthly payments. The surprising truth is that Hometap provides lump sum funding in exchange for a share of future home appreciation. Typically, the upfront funding ranges from 0 to 0, depending on home value and location. There are no monthly payments. Hometap recoups their share when you sell, refinance, or after a set period, usually 10 years. Fees, including processing and evaluation, may apply, totaling to 4% of the funding amount. What you get: immediate access to home equity without monthly debt obligations and transparent agreements. What you give up: a percentage of future home appreciation, which can be significant if property value increases rapidly. Here's how to evaluate. Step 1. Determine your funding needs and home's current market value. Step 2. Review Hometap's terms, including equity share and fees. Step 3. Compare to traditional home equity loans or lines of credit. Step 4. Consider your long-term plans for the property to ensure it aligns with your financial goals. You won't believe what happens next if you ignore terms. You could owe more than expected if your home appreciates faster than anticipated. The surprising truth is that Hometap offers flexibility and liquidity for homeowners who plan carefully and understand the trade-offs. In conclusion, Hometapcom is a viable option for accessing home equity without monthly payments. By understanding funding amounts, fees, and equity sharing, you can make an informed decision and get real value for your money.